Welcome back to Market Minutes, everybody. Today I'm joined by Seth Roteman, Vice President of Investor Relations. Seth focuses on raising capital from individuals, family offices, and institutions, and we're going to talk a little bit about the U.S. investor relations market. Thanks for joining me today, Seth.
Thanks, Chaim. It's great to be here.
A major focus for investors over the last few years has been interest rates. They were very low for a long period of time. Then they shot up. They seem to have stabilized a little bit. Here in Canada, we cut rates recently. In the United States, it's kind of held firm. Where do you think rates are going, and how has this interest rate movement been affecting investors and where they've been allocating?
So I've seen interest rates go up, all the way up, then all the way down during COVID. Then they shot back up now, and now they're finally settling at a point where I think they might go down a little bit, but they'll probably stay around here for the next year and a half, 2 years. Now, this is really challenging for investors that have been getting 4.5%, 5.5% in certificates of deposits, or CDs as we call them in the States. Because now they have money that's going to be coming up that they're going to be getting 0% on until they make a decision on what to do, and they're going to be very hesitant to lock it up at lower rates than they have right now, which for them, they're going to have to make a decision. Do I lock it up at a lower rate, or do I maybe go into a different asset class, maybe a private credit fund, a commodity fund, a real estate deal, a real estate fund? There's a lot they can do. And on the bright side of things, this opens up a lot of money that's out there for allocators such as ourselves to kind of have up for grabs.
So speaking about products in the market and shifts away from what we'd call here in Canada guaranteed investment products that are backed by the government, where are you seeing portfolio allocations? Where are you seeing diversification going, given those factors that we've just talked about?
I'm actually seeing and hearing from a lot of clients that they're putting money into bond mutual funds. One, they like the safety and security of it, big mutual fund name, someone they can know and trust, and also the liquidity is a huge aspect. Investors just don't want to lock their money up for a year or two at a time anymore.
It's interesting. I've seen bond mutual funds, for years. I've been in the space, and there's always the incumbent players in there. Are they going towards the incumbents, or are they looking for emerging managers or up and coming managers as they look to make those allocations?
Right. I think a big part of it is also on their wealth advisor. A lot of the wealth advisors do like to play it safe and go to the big bulge bracket names. There are new players in the space actually that are providing the same returns or even better, and the same liquidity, which they haven't been able to do in the past.
We've been talking here in Canada, I know, for a few years about the shift of wealth transfer from the retirees down to their children. Tell me a little bit more about why we're seeing this transition in the United States.
I do think it does have to do with the baby boomers. They're at the age now where they're starting to retire. They've been working for the last 30, 40 years. They've had money put away on the side for them in a 401k, an IRA, a 403b, or a pension plan that now they finally are able to access it and actually manage it on their own. Within that independent retirement account, you can own stocks, bonds, mutual funds, private real estate funds, private credit funds. So it really opens up more doors than we would normally see in your traditional, 60-40 asset allocation portfolio.
And the way those funds are being managed currently is more conventional. The retirement plans don't have as many products that they're allowed to invest into.
Correct. Traditional 401k retirement plans have something called a fund menu. They can only invest in maybe 2 large cap funds, 2 mid cap funds, a small cap fund, 1 real estate fund, 2 real estate funds, or a stable value fund, which is basically cash or guaranteed interest. They have a lot of decisions that are coming up. Do they annuitize their pension? Do they roll out of their 401k into an IRA where they can make the investment decisions and not be held by the big banks to a slim investment menu? These are all things that are taken into account. And a lot of people of that age don't really need this money for day-to-day living. This is something they're going to pass along to their kids and their grandkids, maybe set up money in a trust or a college fund for someone. So now with that money rolling out of pension plans and retirement plans, there's a lot of money up for grabs for mutual fund companies, for private credit funds, for private equity funds, commodity funds, where everyone is going to be, I don't want to say fighting for their dollars, but there's a whole new asset class, a whole new market for people to actually go out to.
Interesting. So we're not seeing that the investment advisor community, whether it's the big banks or independent advisors, are taking advantage and trying to bring these products in-house, but we're actually seeing that money is shifting and moving outside of the traditional wealth management platforms, and firms like that are offering private credit, private equity are able to access those pools of capital in a way that they haven't before.
Correct. I used to be a wealth manager myself. We had very stringent rules on what we could invest in and what we couldn't invest in. At the end of the day, the investor is going to make the decision if they want to keep their portfolio in the 60-40 portfolio or in their 70-30, 80-20, whatever asset allocation they do choose. You still have to abide by your company's rules. A big thing that was very hot, it's still hot now, was Bitcoin a few years ago. I had numerous calls of clients calling me saying, "Hey, Seth, can I buy some Bitcoin?" Unfortunately, we're not allowed to hold it in a portfolio. It's too outlandish. It's too insecure. Bitcoin is nothing. It's on paper. And that gets back to my point from before, saying investors want something safe and liquid. And Bitcoin is not liquid, it's not safe. So two things gone, but something along the lines of a private credit fund, even a private credit fund backed by real estate, something like that where it's safe, it's secure, you can see what you're owning. Investors like that.
That actually segues really beautifully to the next question that I have for you. Trends that you're seeing from the U.S. investor base. So you just mentioned one. What are some other trends that you're keeping your eye on and trying to help us capitalize on as we look to grow into the U.S.?
So there are a lot of companies coming out where you can actually, they've been around for a while, but they're going to get really popular, I think, soon, where you can actually self-direct your retirement funds, your IRA funds, your 403b funds. They all have to be rolled out into an IRA. But now people actually have the option to choose what they want to invest in, which they've never had before. They've never had access to this kind of money before. So the market, companies are kind of spinning up saying, how can I take advantage of this? Well, they're going to make a product specifically for the baby boomers, something that maybe gets 10 to 12% interest a year, that's safe, secure, and if you need the money back, we can provide you liquidity.
That's helpful. Thank you very much for kind of giving me the landscape of what's happening in the United States. We're moving ahead to a new segment in Market Minutes, which we call Market Minute. This is going to be rapid fire questions. If you don't want to answer, you're not going to answer, you could just skip to the next one, tell me to pass. But these are supposed to be just short responses, just to get to know you and get to know how you think a little bit better.
All right.
All right.
Fire away.
60 seconds on the clock. Is the illiquidity premium worth it in private capital funds, private credit funds?
100% it's worth it.
What's the best slice of pizza in New York?
It's a tough question, but there's a place by my apartment called Italian Village. I've been going there for many years. I think it's the best.
Are interest rates going to go up or down this year?
I would say down.
What's the most overrated restaurant in New York?
Carbone, 100%.
Katz's Deli or Second Avenue?
Katz's.
What's the greatest TV show of all time?
The Sopranos.
What's your biggest pet peeve?
People not cleaning up after themselves.
Early bird or night owl?
Night owl.
What do you order on your bagel, your New York bagel?
I get an egg everything bagel, toasted with lox spread.
And the last question that I have for you is, if you could swap lives with one celebrity, who would that be?
It's going back to my favorite TV show. I'd want to be Tony Soprano.
Seth, it was great having you on the show. Appreciate all of your insights.
Thank you. Thanks for having me.